Let's talk about the markets now. Trideep Bhattacharya of Edelwiess Asset Management Company is now with us. Trideep, are you surprised by the extent of the up move? Just in June, the markets were at levels of 15,200, and in a span of less than 3 months, we've climbed to levels of 17,500. That's more than 2,000 point up move on the Nifty. And it's not that the fundamentals have changed drastically. The Fed continues on its aggressive rate hiking stance. Commodities have cooled. But are you surprised by what we've seen in the markets, and what's the way forward?
I think the market always surprises with regards to the extent of the move. But I mean, we've been kind of advocating the view that by and large, on fringes, the fact that inflation is peaking. And over the next 2 or 3 months, you will see actually inflation coming down. I think the market over the last 2 or 3 months has woken up to the fact that it seems to be happening in that direction, and hence factoring that in with regards to the share prices. The way that happens in share prices typically is that it goes up very quickly, and that is why it has happened kind of in a jiffy. I mean, from the middle of June, the markets have rallied around about 10-12%, is reflective of the same. So I think overall, to a certain extent, the direction doesn't surprise us. The extent and the time frame in which it has happened certainly has taken quite a few people by surprise. We're certainly not one of them, but there or thereabouts.
Okay, hi Trideep, good speaking to you as always. But do you think we are extending it a little bit too much on the upside, given there are still headwinds? The Fed is still going to go ahead, going by that strong jobs data. 75 bips is almost a given. Earnings could see some bit of a pullback in comparison to what the street is working with, close to around 1,000 rupees for FY24. Or do you think that there's too much of hot money at the sides? Now that's coming in. Valuations, can take a bit of a backseat. They want to get in, the FIs.
So, Nigel, a great question as always. I would say that obviously the market kind of, swings around on either side a bit too much. I would certainly say that about a couple of months ago, when markets were kind of looking at good absolute value, we've now moved to more of a relative value, where certainly certain pockets of the market are looking relatively better off. They do have certain amount of valuation support and earnings going for them, possibly in the second half of the year and subsequently in the next couple of years. So I think from an absolute value market, in the sense where there was absolute value in the market, we are now moving to kind of a relative value market, where I think focus, as all of us investors, are going to be on finding those pockets of value and staying invested in the same. Clearly, over the last 15 days or so, we are seeing FII figure, which has been kind of by a big negative so far, turning around. And that is the function of the fact that, to a certain extent, there is acknowledgement of inflation peaking. They can certainly kind of take a backseat if we do have a couple of rate increases more than warranted. But for now, I think, if I look at the recent earnings season, while we were expecting the worst, I would say the corporate health seems to be better than anticipated. And I think the market is kind of ultimately giving thumbs up to that. So near term, it could go either ways.
Yeah.
But I think our fundamentals bottom up are looking robust from a 1 to 2 year perspective.
Rima, Trideep, just let me come in here. Trideep, I think you enjoy a game of either tennis or you think you play some badminton over the weekend. And some good news coming in, from the Commonwealth Games.
PV Sindhu clinches her first maiden gold.
India's first, gold out here. And splendid, right?
Absolutely.
I mean,
there you go. I told you, India story is looking strong.
Something to celebrate. It's just in, a few minutes ago, so I couldn't control myself, Rima.
Just over the weekend, I saw that steeplechase.
Oh, wow. What a fight.
Avinash Sable's. I saw that YouTube link 3 times, that entire video, because I couldn't get over it.
I mean, you're getting goosebumps, just looking at that. The fight that he put in there. Wow.
I know.
Amazing.
And I can't wait to go back and watch, PV Sindhu's win as she wins the gold at the Commonwealth Games, adding to India's tally. Trideep, you said the corporate earnings season has been pretty good and, in fact, better than what you were anticipating. What were the key hits according to you? And did you add on to your position in any of the stocks based on the earnings positive surprise?
I would say that, the lack of negative surprise was actually a bit of a positive.
Okay.
I think heading into the earnings season, we were expecting the margins to take a big knock. given that this was the last quarter where we would see commodity price impact on the negative and no positive impact from the pricing power or the pricing increase that the companies might have taken on the back of commodity price increases. But what turned out to be is that the growth was slightly on the higher side. And hence the earnings downside, as one was expecting, didn't happen to the extent that one people were thinking about. Now, this is a general comment. Obviously, there are specifics in and around stocks, some more, some less. But net, if I were to summarize, in certainly some factors, this was one of the factors that we certainly noticed. And hence, in that context, yes, financials is an area where we were overweight anyway. But we have added probably to our position heading into the result season and through the result season, shall we say, because increasingly we are getting signs that if earnings are bottoming out, domestic cyclicals are the way to be. And if domestic cyclicals are going to do well along with the economy, the lenders or the lending financials are likely to do better as well. So reflective of these views, we have taken an increasingly positive look on financials over the last couple of months.
Okay, Trideep, we'll have to leave it at that. Thank you very much for joining in. So that's Edelwiess Asset Management Company telling us that this earnings season, there haven't been any negative surprises, and that in itself was a positive surprise for them. And they've added on to their overweight position in the financial space. Get into a short break on